Cardinal Stone Securities believes key risks to expectations following Aradel Holdings listing on the Nigerian Exchange include potential delays in regulatory approvals, oil price volatility, strong competition, infrastructure downtime, and security issues in the Niger Delta that could disrupt operations. Now, the securities firm, however, notes the likely exploration of two contingent resources and the success of strategic acquisitions are major upside risks. Adebayo Adebanjo, senior analyst at Cardinal Stone Securities, joins me now for more on this and other stock market updates. Adebayo, thank you for joining us today.
It's a pleasure to be here.
Right. Now, you listened to the MD, Mr. Falade. I mean, what were the key takeaways for you? I mean, very ambitious plans that this company has.
Absolutely. So the key takeaways for me really about what he said about the asset acquisitions, which I think are very, very monumental in the future of that company. Something he didn't mention, which is very, very critical, is the acquisition of the Olo and the Olo West assets, which are marginal fields, which are very, very pivotal in increasing the asset base of the company. Also, another thing he didn't mention is the Renaissance Consortium acquisition of the upstream, the onshore assets of SPDC, which typically would also expand their reserves at demand, also bolster their earnings expectation for the future.
But I mean, you do point out a number of risks.
Yes.
I mean, you talked about regulatory approval issues, delays, etc. I mean, tell us more about that.
Okay, so basically, if you take a cue from what has happened with the likes of Seplat, right, you see how long it took Seplat to close out the MPNU transaction, and that's pretty much what we're likely to see. Those regulatory holdups that typically mar the oil and gas sector, right? So that's some of the concerns that we have. I mean, regarding what I already mentioned about the Olo and Olo West, regulatory approvals are pending. Renaissance acquisition of SPDC assets as well. Regulatory approvals are pending as well. So these are some of the issues that we see that could slow down the progress in terms of how soon Aradel is able to take over these assets and begin to sweat them for revenues. But
they appear to have other irons in the fire. I mean, they talked about increasing their footprints in renewables, etc., refinery.
Absolutely. So for full year 23, we saw that Aradel's earnings from the refining activity, that's the downstream part, contributed around over 40% of its revenues in dollar terms. It just shows you that diversification of their earnings is very, very strong. So they are not so, the risk of one source of revenue, which is the upstream part, does not exist for them. And as of full year 23, they are around 42% capacity utilization for their refinery. And they plan to do over 90% by next 5 years. So we expect that the transition in utilization of their refining capacity, will continue to bolster their earnings that would offset any shocks that might happen from the upstream segment of their business.
Now, they've been, according to him, they've been on the NESD for 11 years, just about 200 or 2,000 shareholder base. But let's look at the listing price, 702.69 per share on Monday. You have a 12-month, first of all, what do you think about that listing price? And talk to us about your 12-month target price projection.
Right, so the listing price is pretty much expected. Typically, when you are moving from one exchange to another, it's always at the cutoff date. So at the time they listed, that was the cutoff date of last week, Friday. Right. And it just made sense that that's the price that will come to the NGX. And because it's by introduction, it is such that the transition is very, very smooth. So it will be as though they had been listed on the NGX already. So there isn't any hiccup typically as regards to the share price. So that kind of made sense for me. Our target price, on the other hand, which is at about a 79% upside as of Friday's close.
Yeah, you put it at 1,258.
Yes, that's correct. So basically, that is just looking at all the upsides that we see. Because recall, this company is a dollar earning business, and our target price is in naira. So to an extent, there's the extent of foreign currency volatility there that also makes that target price the way it is. And because on our own end, when we did our own valuation of the company, we noticed that the company has very, very strong cash reserves. And in terms of valuing a company, when you have a strong cash base, it tends to prop up your valuation, and that's one of the things that helps get at that kind of target price that we have. And of course, because in the projections that we do 12-month target price, right? So we also grow whatever target price we arrive at, by the cost of equity, just to show the lag in period that we're forecasting for. And we're very, very comfortable with this number because, just based on what some of the things that have been mentioned, the acquisition of these assets, expanding the refinery capacity utilization as well. And of course, all these assets that have been, acquired. And of course, when you look at sentiments in the market. This is the first refining business on the NGX, right? The first refining activity. And then when you now look at how the downstream sector is being deregulated.
Right, so much happening. And we've seen, I mean, outside of the banking sector, oil and gas has been investors' favorites.
Absolutely.
Right?
So you see that people are very optimistic about what this means for PMS. And of course, the company is looking to start producing PMS from next year. Now that that segment has been deregulated, it means that revenue accretion from PMS sales will be very good for them.
So are you reviewing your forecast for the oil and gas sector? I mean, we see other players, Seplat, Eternal, and the rest of them. Yeah. And does this apply that rising tide lifting all ships? Can we see that effect in that sector?
Yes, to an extent. I mean, our own projections for the longest, we've always expected this would happen, right? I mean, from the oncoming of Dangote Refinery, we had seen it at some point that eventually that segment will be deregulated, right? So in a way, we've already been kind of factoring it in our expectations that at some point, and I mean, that has already kind of happened. If you see the way PMS prices and energy prices generally have jumped since the announcement of subsidy being gone and all those shifts that we've gone through, it kind of gives you a semblance of how close we are to the actual market prices of these products. And now it appears, the NNPC is backing off away from the market and is letting it, back into market forces. So I think it's a positive for the sector. I mean, maybe not so much for us as
but the consumers, of
right?
course,
but
the consumer sector, that's a different story. That's a different story. I mean, talking to another analyst, and that's always a different story. Yes. I mean, shrinking consumer spending on all of that. I mean, but great to see. I mean, we do want more. I mean, listings in the market. Although he did say IPO, that's still in
the future.
In the future, but hopefully that will happen.
Yes.
I think we have about 2 minutes left. Let's talk about other market. Inflation came in today, 32.7%. We did see a slight drop in core inflation, but the analyst I spoke to earlier said, look, we need to see 1 or 2 more data prints to because we did have 2 increases in petrol pump price, so let's see the full impact. But what are your thoughts?
I mean, for the longest, analysts have expected that we'll see base effects begin to moderate our headline inflation for the most part of this year from the second half, which we saw happen around May and June. But then the shocks that we've seen now from PMS prices have kind of taken us back again upwards. So I think that the inflation numbers have not really seen the full impact of these jumps in PMS prices. So I still think that we might still see a couple more months of slower increases, but increases anyway before we now begin to see some level of tapering in the number, and that's largely from the core end. From the food end, I think the government is already trying to do a lot to kind of curb the impact of rising food prices. They recently announced that they'll be stopping VAT payments. Or,
that is yet to kick in so well.
Yes, but in the eventuality that it does, we think that should also help to buffer up, kind of ease the pressure on food prices.
Right. And banking sector, obviously, we cannot have an equities discussion without talking about the banks, still the most liquid sector. Where are you seeing volumes?
Right, so I think volumes really would be on how the market sees Q3 numbers. Right. Already H1 numbers have come out, which is very, very good. So far, the audited H1 numbers have been really, really decent. But away from the numbers, which are kind of historical, I think the market wants to see how much capital has been raised so far. There hasn't been a lot of information on all the capital raises that have been done so far. So everybody wants to see how much have you raised, and where was your capital raise successful, right? So everybody's looking for all these pointers, because the truth is there's going to be dilution in holdings from this share capital raise, and a lot of people are worried about all those interplay of all those factors. So I think that once we see the impact of this capital raise, that's when market will fully digest what to expect. But as far as H1 is concerned, H1 numbers were pretty good. Right.
Adebayo, we're going to have to leave it there. Thank you so much for sharing that perspective with us. We appreciate the time on the show today. Adebayo Adebanjo, Senior Analyst at Cardinal Stone Securities.